And gold is simply waiting for a bit more of that evidence to come into play where people recognize it and say, the Fed quit the game. They're back to, boom. Gold will then, I think, ascend rapidly.
So it seems like what you're saying is because of the support we've seen in gold and the strength that we could start to see a slingshot of the miners, both gold and silver, and for silver itself, back toward the upside towards fair value?
Yeah, it's not going to continue the way it's been for the last, let's say, since March. All of them made highs in March that looked pretty good. Gold pulled back to unchanged on the year, and the rest of them went down and took out the lows, the intraday lows, intra-month lows of the last 2 years. Now, admittedly, those lows are at much higher levels than the price levels of silver and the gold miners back in 2015, 16, and 17. So we're not taking out lows, multi-year lows. We're just taking out the last 2 years' lows. But that's still a significant deviation that is either right or it's wrong. Either gold joins them, lagged to them, or gold is smart and they're dumb, and they're subject to investor over bearishness. We're not contrarians at MSA. We study momentum of price, structurally speaking, just like price chartists look at the structure of price. But if we were contrarians, we noted that the commitment of traders report for silver right now is at exceptionally bearish levels, like historically levels that every time you see these type of levels of bearish consensus among commitment of traders, it's a bottom. Okay, so we'll throw that in as a little extra wet noodle evidence. It's not something you can trade off of, but it's something in the background. And so our bias is that, okay, the bears in that sector are on top of the situation and have been for now 4 months. We're now entering the 5th month since the March high. Either they collapse gold in this 5th month of pullback, and so far they've not been able to do that, or the markets that have dropped sharply will snap back. And that percentage snapback alone could be terrific gains. So watch the disparity between gold and silver and the gold-silver miners. We think it's a unique situation. And ultimately, if in fact gold is on top of the game and it's holding it unchanged on the year because of wise, large fund asset managers are saying, listen, we're tired of the paper game. The paper assets are breaking. They're breaking in unison. They're breaking hard, and they're not through. Where do we go? And they perceive gold to be at least a stable place for the moment to be. It perhaps, given more recognition of that fact by more and more asset managers or more and more investors, for example, if gold and silver and miners snap back, if the gold miners and silver snap back, then that flow into that small sector could have an enormous upside impact.
So it's not necessarily just snapping back to fair value, but we could go beyond that?
In other words, it's a game where gold is in charge and it's really poised for the next up leg. And you've got to realize that since I got in the business, which is in 1975, is on the future side with E.F. Hutton as a gold specialist. Gold was legalized for trading in January, and I was hired by Hutton in April. The lowest I've seen gold since I got in the business was at $103.50 in August of 1976. It had pulled back from its bull market peak, had a 50% correction from $200 down near 103. And since then, it's what? It's gone from like $100 to $2,000. Now, why has gold done that? In big legs, admittedly, with sharp pullbacks, but why is it done over that period of time, this consistent upside, massive upside? You go back and look at wheat or corn or the price of anything going back to the mid-70s. They've not done what gold's done. Why? Because the degradation of the money unit has been consistent by central banks of Europe, United States, Japan. It's ongoing and it's not going to quit. There was an interesting little headline I saw. I don't listen to it, but I see the headlines on like CNBC and so forth. The Fed of Atlanta said we're in a recession. They didn't even wait for the data. They know we're there. It's 2 quarters of negative. What if you're in something worse? I suspect we are. I think we've only just begun. And there's a point at which the central banks of Japan, which has never really wavered from its easy policy, to the ECB, which is now starting to waver back toward maybe a little softer approach, and the Fed, which pretends to be, a hawkish. Even the Fed is looking for data points. That if they can find enough of these so-called hard data points, they come, we see them once a month, unemployment or consumer price, whatever, and they see enough things that look okay, you can bet they're going to begin to shift back toward a less, quote, tight policy. And I think if that is the case, because of a weakening economy, especially a sharply weakening one, and don't treat the U.S. as separate, by the way. Don't just look at U.S. data. Look at what's happened in Japan and Europe in terms of economic data points. Because as they go, we go, okay? The Fed is aware of that. If they start to see enough excuses to begin to halt their rate rises, which have been trivial anyway when you look historically, and even hint that they're going to cease the rate rises or diminish them, or going to have to increase their balance sheet because the muni bonds are collapsing. Remember, muni bonds are something they bought on their balance sheet back in 2020, 2021, and also high yield corporate debt. Those markets are imploding now that the Fed isn't outright buying them. Well, they can't allow that to happen. Perhaps gold knows that. Perhaps gold knows that the weakening economy of the world will ultimately cause a subtle but serious reversal in Fed policy back to what they do as a business, and that is to support government debt and to support paper assets. And gold is simply waiting for a bit more of that evidence to come into play where people recognize it and say, the Fed quit the game, they're back to, boom. Gold will then, I think, ascend rapidly.